Good morning and welcome to the Orlando Real Estate Buzz. I'm Brendan Rendo with the Homes in Orlando team and joined as always by Joseph Dion of Apley Home Loans. And well, Joe, after a week or so of kind of quiet, just pushing along, all of a sudden we got some news this week. Powell came out yesterday. I think kind of surprised a lot of people on inflation. We got some job numbers, new job numbers, and then we got some revised job numbers that were extremely interesting. And then we got some inflation numbers that are kind of not real helpful in any manner whatsoever. Do you know what,
Just a little bit.
Just a little bit. But it was kind of interesting because Powell came out yesterday and he said he wants to see more good inflation readings, before it can cut rates. And you look at some of the headlines, and the headlines are like, oh, inflation's under control. But you're seeing upward pressures in a couple different areas right now. Yeah. And, earlier this week, we got the manufacturer's PMI, and that put a lot of pressure on interest rates. And I think you saw it, what was it, Monday, Tuesday, you kind of took a hit?
Yeah, we took a little bit of a hit. It hasn't been too much fun. Little rebound afterwards. But yeah, we definitely saw that 10-year bond really bump up. Not necessarily bad in the grand scheme. You don't want it to go too fast, but we're kind of really wedging into a very, very tight support resistance level. So we can really see it move. We might see a wild movement one way or the other in the near term.
We had been sitting, in that 4.2, maybe 4.28, kind of up and down a little bit, but we broke back above that 4.3, and price wise we're sitting where maybe about 7.25, a little over 7.
Higher. If you don't want to pay discount points, you're going a little bit higher.
Okay.
If you want to pay discount points, 7.25 is pretty reasonable, but we've got a lot of our lender pricing from closing yesterday was saying in that 7.375 to 7.625, almost all of our investors. That's
wow,
20 plus investors.
So we're probably gonna see an increase in the discount points. People trying to get those rates down a little bit because we kind of settled. I think people were starting to feel, they weren't liking it, around that 7, maybe a little bit lower, but they were willing to go into deals. And I think we'll see that. And I hope this doesn't pull us back a little bit, because past week and a half, I've actually talked to a lot of people that are starting to feel like, okay, it's springtime. Yeah, I think we want to try and take a look. A lot of questions about, what, first-time home buyers, are there any programs that we can currently get into? Anything you can help, any way you can help direct us. So we've got the one with the $5,000 grant that's currently available depending on where you live. And then of course, was about 70, 80 days from now, we're going to have the Hometown Heroes with the 100 million.
Yes.
So if you're a first-time home buyer and you're sitting watching, we got to get you ready. Don't be afraid to reach out to us, and let's start getting you ready for what's about to come.
Yep.
We had the manufacturers, had the service PMIs come out, but I think this was another driving force as well, is the ADP job numbers came out. We jumped 184, which was well above the expectations.
ADP at 150,000 is what they were estimating. So that's a bigger increase up. One thing that really caught my eye about this, though, was the revised numbers. Because usually, what have we seen? We've seen revised numbers always go down.
Yes.
Revised numbers go up.
Yes. This is from the Philly Fed for last year. The Philly Fed revealed that the job numbers were inaccurate by 800,000 jobs.
That's a big inaccurate number. And they just updated this. What was that?
April, I think April 2nd.
Wow. So just
Or
came
April
out
1st. April 1st.
So,
And it
like,
wasn't an
how,
April
like,
Fool's
that's a
joke.
no news. Like, nobody really caught, like, it kind of just slid right there. And then, like, 800,000 is a significant revision to be like, hey, last year we were off by 800,000.
That's one thing that's always bothered me. It always seems like when they come up with the revisions, it's like page 89 in the newspaper. Like, oh, whoops, we're sorry, we screwed this up, but yeah, we did disclose it. It's way back here.
Yeah.
But they said, instead of 1.1 million jobs touted by the administration, the actual increase was only a mere 10,000 jobs.
It's a big difference.
That's a huge difference.
Big difference.
And they also said that actually 23 states saw job losses during that period. So remember we were talking last week, we're told that the economy is robust, but is that what we feel from our clients out there and from the people we're talking to out there? And it's just, now I've got some justification of why what I'm feeling is the way it is because, the numbers just aren't there. And you had mentioned something about the layoff numbers came out this morning.
The Challenger report that just came out every day, once a month, they come up with a report. And this is the Challenger job cut report, which is basically corporate layoffs. Like bigger corporations have to report to the states, this and that, to the state departments of labor. And they actually showed that there was 90,309 layoffs in March reported through this, which was slightly above before. In February, there's 84,638. The big thing to take away from this was the biggest reported number since January of 23. So we're seeing those corporate layoffs continue to go up.
Yep. So I think the Fed's looking at the new data, not looking at the revised data. And I think that's where Powell, I just don't, he comes out kind of dovish, but boy, does he pull back quick. The slightest little change, and all of a sudden he pulls back, and Dove gets thrown back in the cage. Because I mean, right now, when we look at it, what people are looking at as far as possible cuts, May's off the table. Yeah, May just like we had just done the previous month, we said it was going to be off the table. May really right now looks like it's off the table. It's not going anywhere. We're not going to cut. But I found this kind of interesting. Even with Powell's news conference yesterday and discussion yesterday, about 6% over a week ago of people thinking that June's going to be the first rate cut.
Which is interesting.
Jumped up to 61%.
Very, very interesting, because I feel like both in yesterday and in February of this past week, Powell was very kind of like, hey, like, higher interest rates are okay. We may see this for longer. We may, like, he took a very, like, I thought, kind of a hawkish kind of like, hey, like, we're going to sit back. We don't need to do anything. Let's see more data to show we're heading in the right direction. We haven't seen it yet.
Yep. I think both you and I are on the same page that we really don't feel that we may see our first rate cut possibly now until September. If they continue the numbers, it's going to be interesting, because I think the closer we get to the election, I think there's going to be more, it's not supposed to be political, but it always is. I think you're going to see more pressure on Powell to cut rates to give a little boost to the economy if we continue to see revised numbers coming in where they're coming in. Yeah, I think the administration is going to put a lot of pressure on them to, hey, let's do one or two cuts. So maybe that's the pressure that we see coming, maybe in June, maybe in August, that, hey, we want to make sure we've got a nice robust economy for the election period. And I think that's maybe some of the additional pressure that Powell is starting to feel overall is, okay, I got the administration kind of calling me up every day. Hey, how things going? Hey, yeah, when are you going to cut those rates? Yeah,
When are you
June
gonna
would be great. June would be wonderful.
Yeah, I think you're right. We can start seeing some of that administrative cut on that, that pressure that's going to start to play in. And I think maybe that's what we're seeing with a lot of these people starting to increase is they're going, maybe we're going to see some pressure, and that's why we're going to see some movement.
Yep. Yep. And if the numbers in the housing continue to stay flat, I think you're going to see additional pressure in that area. Especially if the inflation numbers keep going up and there's continued pressure on the interest rates to push up a little bit. Because one thing we haven't talked about is gold.
Yeah.
Gold which is a hedge against inflation, has continually gone up, and it reached a recent new record of over $2,300. So people are moving to gold because I think there is some fear of inflation reigniting over where it showed the decrease. And I think if we look over the past 3 to 4 months, we've seen a slow and steady increase of those inflation numbers. So going to be something interesting to watch to see how political pressure plays on this whole thing over the next several months with the election coming up as well. So that's kind of where we're sitting there. And then let's hop into our numbers. It was actually a very good week last week. And this may, like we said, be more with the people we're starting to become more comfortable where the interest rates were, or there was a chance maybe to even buy down your interest rate, be a little more aggressive. And we saw a jump of over 100, roughly about 120 home sales for last week. And that's pretty good in the middle of the month. And we also saw our inventory decrease a little bit, which I kind of expected because it's springtime. We had the holidays coming up, and I've seen more people with the rate stabilizing, kind of feeling, okay, this is where we're going to be. We're going to go ahead and make the move ahead and go ahead and purchase. And then condo market, it's just as flat as it has been. But look at this, we actually went down 14. That's the first time we've gone down, I think, in a year.
Is that just people getting fed up and taking them off the market? What is that?
It very well could be. It's interesting because I was talking to you yesterday. I've got 2 clients who own vacation rentals, condos in the Disney area, and their bookings are down by probably over half, if not greater, right now.
Wow.
And I looked in both of the communities, one Bahama Bay, the other Wyndham. And Bahama Bay, I believe, has 26 units for sale right now. And Wyndham has 22 units for sale right now. That's a lot of units.
Right there.
And in the past month, I think only 5 have sold. So they're not turning a whole lot. And your average days on market in those communities is jumping up to around 100, 110 days on the market. So they're sitting. They're not moving too quick.
Interesting.
And then here's the ones we always really enjoy looking at, which is the original to final list price. And we broke down again and dropped down to 91%. You want to see where the big one was? Again, in the over 1 million market. The original to list average was $390,000.
Is that just because there was just one big, one big sale or something?
No, there were 48 sales of over $1 million.
That's still, 48 sales in a week in the million plus range. Like let's be real.
That's a great number. But look what you're having to do.
90,000 average drop.
Yes, price.
Wow.
So they came out to roughly about a 15% discount off the original list price in the million plus to sell homes last week. That's people just getting tired of their house being on the market. Like, I've got to sell this. Let's do whatever we have to do to get.
Are these buyers like, with that big of a drop, are they still kind of like from the equity gain? Like, they didn't lose all their equity. They're still in positive position.
No, the majority of them are still have a great equity gain. It's just they're trying to get everything they possibly can out of it, and people are just not willing to do it anymore. You know that your average days on market are 60 plus days. Again, this goes back to the changes from the old way real estate was done, which was, hey, 6 months was a buyer's market. Now, really, that's 60, 90 days. That's really where it starts, I think, to be very advantageous for the buyers. I mean, when we look at our months, if you go up here and we look at our months of inventory, we're almost at about 3 months worth of inventory, which, even a year ago, this was sitting about a month and a half worth of inventory.
Mm-hmm.
So we've gained a lot. We've gained a lot as far as the inventory in the Orlando area. And remember, this doesn't include the inventory that's in the builders' pipelines as well, which is continuing to increase every month. So there's a lot. As a buyer, there's opportunity to make things work and really go in aggressive on your offers.
Ask for it.
Yep. And then you see our charts, and you see, this is kind of what we expect is, with the month going up, with spring coming in, that you're going to see an increase in your sales. Has it increased as much as we thought? Not really, but it's better than sitting down here at the 350 average where it's sat since basically November. And then our total actives, we're still up nearly 4% over the beginning of the year. And I think as long as we stay up above this, really this 5,400 number, it seems that we're going to continue to stay in that 60-day market for most homes. Then we got into the condos. You see here that, we're sitting roughly about 95%.
Mm-hmm.
And of course, the majority of the sales are in the under 250,000, market. But look at the months of inventory. We're about 5 months worth of inventory right now through the overall condo market.
Yeah.
And when you get above the 500,000, you actually broke that 6 month mark. So again, condos, if you're looking at a condo, you can be aggressive. You can be very aggressive. I may have a listing over in the Tampa area for a friend of mine, and same thing that happened here with the HOA fees increasing. They had a $200 a month increase in the HOAs. It's just like, Mom, I can't
Doesn't make sense.
pay the HOA, pay my bills. So he's actually moving back in with his mom and selling the unit because the HOA has gone up to, what would she say, $620 a month now. And I think we're going to start, until payrolls catch up to the increases everywhere else. I think we may see some more of that continue to go on.
Yeah, I think you're right. And you look at some of this, like I read, like a $200 increase, that's $40,000, $50,000 in buying power in reality. So like, my thought process on this is like, hey, if it was worth, 400 with a $400 HOA, are we potentially looking at like the marketability on these homes is now 360, 370 because that HOA increased? Like they're losing that equity because people are looking at the totality.
Yes. Yeah. It was interesting because I have an appointment on Saturday for a gentleman over in Apopka in Rock Springs. And I was looking at the list price, and for the first time, the list pricing over the past month on the new listings has dropped 6%. They keep track of that statistically. So the average list price within the community, and they're pretty similar houses, most of them, the starting list price has dropped 6% within that community itself. So that kind of shows you where things are starting to go is, the overall price is leveling, and people to get people attracted to try and sell quicker are tightening what their original list price is on their homes. And they have to, again, because because of interest rates, taxes, the increase in taxes that are gonna be there, and the increased insurance. It's taken away from the buying power, and it could be, all of it together. You're probably looking at, 30, 40, $50,000 possible decrease in what you could afford over even a year ago with the exact same payment. So that's where our numbers are today. Thank you for joining us. Thank you, Joe. And please like and subscribe and join us every Thursday here at the Orlando Real Estate Buzz.